Hello everyone, this is Ken Simpson with crystalbull.com with our new stocks to watch for the week of May 19th, 2019. We want to do something a little different here, where we've had many requests for people to try to do individual stocks, and we want to take a stab at finding some of the better stocks to look at week to week. Can't promise that we'll do this every week, but when we get time, we will. And we have time this week. The following is for educational purposes only. Nothing you're about to see should be considered investment advice or a recommendation to buy or sell any security or to participate in any particular trading or investment strategy. Trading involves risk of substantial loss, and you assume all that risk. This is not investment advice and may not be suitable for your situation. If you want someone to blame for your investment losses, hire an investment advisor. I am not an investment advisor. You can follow me on Twitter at crystalbull. The charts you'll see in this presentation were created using MarketSmith, which is a registered trademark of MarketSmith Inc. You'll see some enhancements with some custom colors and so forth, which were done with a custom Chrome browser extension that I wrote. Please don't ask for a copy of the extension because MarketSmith will not give me permission to distribute it, and without their permission, I will not do so. Okay, so let's get started. Okay, so we like to start with showing the NASDAQ 100, which is a pretty good mix of high growth stocks, of tech stocks and so forth, the 100 biggest NASDAQ companies. And so we want to show, we've overlaid here the Investors Business Daily market calls from their Market Pulse, along with the Crystal Bull market calls. And where we are today is here at the IBD on a few days ago, put the market into correction. Now IBD has been 180 degrees out of phase with the market many times over the last few years. You know, they're not picking a bottom here. They're telling people to sell their stocks here, and they time after time they do it at a bottom. Not good advice. A lot of people have been hurt by this, and what I've done here is this orange line you'll see at the bottom. And I know it's a little hard to see, but they don't give us a lot of color choices here. That represents following the Investors Business Daily ETF strategy, where you use their market pulse and you sell everything if it goes into correction. You buy stocks when you go into a rally, and if it goes into market under pressure, you sell half. So you're only half in the market. Now what you'll see is the double arrows I have shown in correction, the single arrows when they went under pressure, and the green arrows are when they said market rally. So this is what you end up with. You know, this is the idea. This is a trend following system, the market pulse from IBD. And the whole idea of a trend following system is to try to get you out when the trend turns negative and to try to avoid some big drawdowns. This did not get anybody out of this drawdown. This was, a lot of people got hurt here. They bounced around, they sold at the bottom, they bought back higher, they sold again, they bought back higher, over and over again. And so this is what you ended up starting from, as far as this screen will go on this computer screen, going back to February of 2018. This is what you would have done if you followed the ETF strategy from IBD. Okay, not good. The market's way up here, and this kind of treaded water, and if you're following this, you probably had a difficult time in here. A lot of people get scared and frustrated and causes a lot of stress and anxiety, but you got bounced around in here. Okay. Light colors here, but I overlaid some of the Crystal Bull timing indicators here. The gray that you'll see is when the Crystal Bull timing model went in the market, and the pink is when it exited. So right here at the end, this is where we are. IBD's in correction. IBD has their followers pretty much out of stocks right now if they're in the ETF strategy, or ready to sell. Click the mouse and sell your stocks if you start to suffer any losses. Crystal Bull exited right up here, okay, on Thursday, at the close on Thursday. So we're also out with our trading indicator. So this is a time to be cautious, all right? We only have 5 stocks to look at in our stocks to watch this week, and we'll go through those here in a second, but I just wanted to show you this. It's a time to be cautious here, perhaps. Now the blue line that you'll see on the chart is the Crystal Bull timing model. Now we were out of the market pretty much right here with IBD, and we sat through this. We got in the market here and went up a little bit, sold it, here, and then we were out of the market, got back in, and so forth. But this is, the blue line is what the crystal ball timing model did. We're also behind the market a little bit, not too much. The crystal ball trading indicator over its history has been in the market about half the time and capturing most of the market's gains. Many times more, sometimes less, but we do our best to beat the market. But the idea is there's value in being out of the market, because your market risk is, by definition, if you're out of the market half the time, your market risk is half. You know, if you have somebody lob a missile or terrorist strike or something like that, which you could have a flash crash, you have a 50% chance of being out of the market and being out of that. Very seldom does the market melt up, 10 or 20% in a day, but it can do that during a downtime, during a severe, like a terrorist attack or something. So there's value in being out of the market sometimes. So this captures, if you draw a line from where we started here, we're on a path like this. We try to ratchet our gains up with the market. IBD is in a path like this. Okay. And the other thing is we didn't suffer the same drawdowns. We did have some drawdowns. This thing took us by surprise here. And again, we did have two minor drawdowns, but nothing like IBD did. Their followers got hurt here. So anyway, trading indicator is the best stock market timing model that I know of, that I've seen. It's not perfect, but we do our best to try to make it so. And so far, we're happy with it. We know we're on the right track, but as time goes on, we'll try to keep making improvements to that. The IBD Market Pulse is a trend following system, which gives you calls like this, where you buy right at the top. Here, where you sell at the bottom. Here, you sell at an intermediate bottom. Here, you sell half at the bottom. Here, you sell half at the bottom. Here, you sell at the bottom. Here, you buy near the top. Here, you buy near the top, and so forth. That's what happens when you follow a trend following system. The crystal ball trading indicator is the opposite of a trend following system. It's looking for overbought and oversold conditions, such as here. When it entered the market at the bottom, IBD had put the market under pressure here at the bottom. Crystal ball went in. That's what you hope for when you're building a market timing system. Or here, crystal ball sold right here at the top, right? IBD sold down here. That's the difference. This is not a trend following system, and that's why the results are better. Here's the crystal ball, the current trend indicator. The model's back in. This is how it's done. The trend indicator is also a trend follower. We try to avoid those drawdowns, and as you can see, this has done a pretty good job of avoiding the drawdowns. Okay, it went out earlier and it's back in the market. Let's show this on logarithmic scale. You can see that it has more consistent returns without the drawdowns, and that's the beauty of a trend following system, and this is the best we could come up with, and we're happy with that. This is for somebody that wants to trade infrequently. Sometimes go for years at a time without a trade, but usually you're trading once every 1 or 2 years or something like that. That's the trend indicator. Here is our macro indicator. You've had a lot of talk about the yield curve or recession coming and so forth. Our macro indicator is our best indicator for the current macroeconomic trend. And you can see that it's been falling here a bit. It's dropped, but it's still, we're pretty far from a recession, but it is dropping. We're going to monitor this closely. You can see when it drops below zero, that's usually a precursor to a recession. So we want to pay attention to that. But according to this, we've got a ways to go. The market is still strong, and that's what we like to see. You've had an inverted yield curve in a couple of the times, and people are calling for a recession now or shortly. But this macro indicator is showing that we still have some time. Hopefully, we have many months to go. Okay, that's bullish. And here is our trading indicator, which is what I just showed you there on the MarketSmith chart. It updates every 5 minutes during trading time, and we try to pick the inflection points for where the market may be overbought or oversold. And you can see here that it picked up this dip as an oversold condition. We were already in the market, but picked up that with an additional signal, oversold, and it picked up these dips, oversold, oversold, oversold. This is the market many times bounces off our signals, which is incredible. and it stayed in the market here. It picked up this, dropped back into oversold at this dip here, picked up this dip, We've been in the market through all of this now, you have to remember, but it picked up the dips in the intraday, picked up this dip, and now it just exited where I showed you on the Market Smith chart, the close on Thursday. So this exited the market here. That's how the trading indicator works. Subscribers get to see this in real time. Again, updated every 5 minutes during the trading day, but this is what it looks like, and you can play along at home and see how the market responds to our trading indicator, as if it cares, but it does seem to bounce off the trading indicator many times, which is very encouraging. Okay, so let's get back to Market Smith. Okay, that gives you an idea of where we are. We're cautious right now. We're the crystal ball trading indicators out of the market, even though the trend is okay. It's not terribly strong, but it's okay. And the macro conditions are coming down, but still okay. They're still bullish. The short-term trading indicator is out, and so you want to exercise caution here. So in this kind of a situation, in this kind of a market, we're going to be cautious, and we'll have 5 stocks to look at this week. So we'll start with Innovative Industrial Properties. It's a REIT. We're not big fans of REITs typically, but funny thing in this market, they're popping up. This one is related to cannabis properties, and that's kind of a hot thing, and I don't know how you feel about that, but there are a lot of people getting into cultivation and processing of cannabis products, and here you go. Here's a REIT that focuses on their real estate. Volume has been picking up here. Volume has been coming in, and this thing has had a real nice run up and formed a base. It's a 4-stage base. If you look at this on a weekly chart, you can see that it bases. It's a late stage base. 4 stages, kind of late in the run here, but if this thing were to start to break out, you have a power of 3 where you have the 3 moving averages converged here, which is the 50-day, the 10-day, and the 21-day EMA. Okay, the exponential moving average. They're all converged here. So those should be a support. You can, if you wanted to take an entry here, or at least wait till it broke out, you can use those for support. Hopefully you'll have institutions protecting and defending their positions as it's tried to drop below that. But this is you have 3 different support levels at once. That's usually encouraging. Okay, you've had terrific fundamentals, 135%. This is funds from operation. Think of it as earnings per share. But it's this is a REIT. It's not a stock, so it's a little bit different. But 135% growth there in their let's call it earnings, and 147% growth in revenue. Really strong. They have only 1.5 stock checkup flaws, no debt for a REIT, and 99 composite rating. Person could enter here on an early entry, but this is the standard buy point here would be at $92.34. If a person drew a sloping trend line across here, they could get in a little early. If a person wanted to go back retroactively and use this as a sloping trend line, a person could get in at this level and just take their chances. Okay, you'd have a 7% stop loss on this one if it dropped, or you might just want to wait till it gets to the buy point. But that's it. That's a REIT. Kirkland Lake Gold, a gold company. Here we are back to the commodities again. Had a real nice run up, putting in a base. You're 1 day away from a handle here on this cup. We're encouraging, terrific fundamentals. 112% EPS growth, 54% sales growth. It's a Canadian company. These are in Canadian dollars, but still pretty close. Half of a stock checkup flaw, 99 composite rating, and almost no debt. 4 days into a handle. Another day you'll have a legitimate handle, and you're real close to this power of 3 again. Okay, a lot to like about this if you're into gold. HubSpot, back to a software company. We've been following this for a while. We did trade this a few times. Sloping trend line here, but it broke out and it's pulled back into the buy zone. So this is still buyable, which is why it's on this list. They've already announced earnings. This red arrow means that they've had 2 quarters of deceleration of earnings. Now the earnings are still growing, but it's a deceleration. There's 140% earnings growth, which is fantastic, but it went from 208 to 467. So there's your 2 quarters of decelerating earnings growth, which is just a precursor to pay attention to. Maybe they have falling earnings, but they're still growing strong. 140% earnings growth is fantastic. The market's already seen that and reacted, and it's pulled back into the buy zone. Now, a person could take an entry here. You're in the buy zone. Again, I'm not giving investment advice. This is just how a person might do it. Here would be a support level. Okay, you don't have to wait for this thing to crash. If you're wrong, you can get out about here. Take a small loss and wait for the next setup. But that's 5 stock checkout flaws, 99 composite rating. They do have some debt, but it had pulled back into the buy zone. Okay, so we can pay attention to that one. We've already seen earnings. That's a positive. CHGG. This is a little different. This has a real nice run up, and this is what I'm calling a double bottom. This is only 17% deep, and most people like to use at least 20% depth for a true double bottom base. That's probably why it's not showing up here in Market Smith as a double bottom. 17%, but I'm going to call this a double bottom. You've had 2 true shakeouts. Look at these days, really high volume shakeouts. Knocked out a bunch of the players, but it came back. People's coming back. This green box is a shakeout, this first shakeout plus 5 to 10%. So if we get back into this green box, that could be an early entry. There's a sloping trend line here, which is going to meet up to about the same place. If this thing spends a few days climbing, you may have the power of 3, the 3 moving averages as support. So anyway, this is something to pay attention to. You've already seen earnings, and it did not react well to earnings, but it's coming back. It's clawing its way back. So that's maybe just giving a person an entry into here. 50% earnings growth, 27% sales growth, 98 composite rating, and 4 stock checkup flaws. A little bit of debt, not too bad. Anyway, coming back into a buy zone possibly here. And last stock is SPLK. I copied this out of Investors Business Daily. It says Wall Street expects per share losses to widen to 15 cents from 7 cents in the year ago period. So the second quarter of 2018 was a 7-cent loss. They're expecting this number to be a 15-cent loss. So that's not good. So we don't want to go buy this stock, even though it's setting up to a buy point. A cup with handle here, just below the buy point. We have to wait for earnings. Okay, earnings are due 5/23. In just 4 days, they're expecting earnings. We're going to sit and wait for those. If earnings come out positive, and if it beats the 15-cent loss, hopefully it's a gain. We don't like to see losses in our stocks. But if that comes in with a nice surprise, we're going to be watching it and hopefully pick it up in the buy zone. If it fails, if they come out with a big fat loss, we don't care. We're not in it, and we'll let it go down without us. But if there was a surprise here, this is why we're watching it. So that's SPLK. Usually have more stocks than this to look at, but we're very cautious right now. Got 5 stocks to look at, and some of them are a little iffy. Again, this is not investment advice. I am not your investment advisor. This is for educational purposes only. You can follow me on Twitter at Crystal Bull, and thanks for watching.